Hello, I'm Jessica Amir for the Finance News Network, here with Quickstep Holdings CEO and Managing Director, Mark Burgess. Mark, welcome to the network.
Thanks for having me.
For new investors, just give us a quick introduction to the company.
Okay, thank you. So Quickstep is Australia's largest independent supplier of carbon composites to the aerospace industry. We have a strong position. We'll generate about $1 billion of revenue over the production life cycle of the F-35 program, the world's largest defence aerospace project. We're also global sole source on the C-130 Hercules aircraft, which is the world's longest running large freighter for the military. Our primary production capability is out of Bankstown in New South Wales, where we produce parts for both the F-35 and C-130, as well as other new start programs that are just beginning. And we have a global R&D centre in Geelong, Victoria, where we're taking full advantage of some of the post-auto engineering capability that can be of real use to the aerospace sector. So we've got a lot of ex-auto guys in that R&D facility down in Victoria.
Now to your manufacturing capabilities in a little bit more detail. What can you tell us about your composites?
So the carbon composites that we produce at our Bankstown facility are using the traditional autoclave, high-pressure oven, curing process. We build those parts for the Joint Strike Fighter. So the production life of that contract will be responsible for about $1 billion worth of manufacturing content on the F-35. We also are global sole source for the wing flaps on the C-130 Super Hercules. We have rolling 5-year contracts with Lockheed Martin for that, again using conventional autoclave technology. We're also developing new parts for Lockheed Martin and others at our Bankstown facility, where we take existing metal components and manufacture them using carbon composite, or we seek to enhance existing carbon composite parts through product improvement. At our Geelong facility, we focus there on removing the autoclave from the manufacturing process. So our premier proprietary out-of-autoclave manufacturing process technology, Cure, is significant in that it reduces capital investment by 5 times or more, but most importantly, it allows process optimization. It allows the continual flow of parts rather than flow batch to put in the high pressure oven and then back to flow. That's important for 2 reasons. One, it substantially reduces the manufacturing cost, as well as allowing unprecedented rate achievement. And in our industry at the moment, manufacturing to rate customer demands in an increasingly high volume market is a really significant differentiator for us.
Now to financials, Mark. What can you tell us about the sales for the first 9 months of the financial year?
So sales for the first 9 months were 42.5 million. That's 14% up year on year. At the AGM in November, we said we would be increasing sales year on year by greater than 10%. We're on track to do that. Additionally, we've been significantly improving our margin performance. Our last quarterly, the third quarter of our financial year, was notable for a number of reasons. Firstly, strong sales performance, up 15% on the prior comparable period. Most importantly, from my perspective, we demonstrated significant margin expansion. And that's a result of some of the changes that we implemented 8-9 months ago under the One Quickstep banner to drive operational efficiency. So significant margin improvement on greater sales. We also paid down debt substantially during the quarter and exited the quarter with more cash on hand than we had entered it. So it was a strong financial performance. I expect that to be repeated in Q4, allowing us to post a strong second half performance, then moving into fiscal 19, which will demonstrate both positive cash flow and positive EBIT.
Now, can you tell us about your strategy and how that's progressing?
So our strategy is threefold, really. First of all, our core defence aerospace business, it's growing strongly. We expect sales to almost double between now and 2020, 2021 to about 90 million plus. We're going to continue to pursue incremental opportunities with existing and new customers in that segment, as well as then exploiting our proprietary process technology Cure and the Quickstep production system, the material to finished part technology flow that we're investing heavily in at the moment in both the aerospace and automotive industries. With then the third phase of that strategy being a more expansionary offshore focus on significant inorganic growth, as well as making moves in a substantial and meaningful way into the commercial aerospace domain.
So why should investors be adding Quickstep Holdings to their portfolio?
So I think over the last 12 years that we've been listed, we've often set expectations that we've failed to meet. We're being much more diligent and deliberate in the expectations that we're setting. We've got a strong order book, booked orders growth, as well as some really exciting opportunities on the new technology side. The business is at an inflection point. We've, I think, cast off some of our legacy issues around failing to meet expectations and poor financial performance. You know, the last quarterly financial performance, I think, is going to be repeated every quarter going forward. And I'm confident that over the next 2 quarters, we'll be announcing new program activity, so new contract wins, with existing and new customers. So it's a real inflection point for the business. Our share price has never been so low, yet we've never been in a stronger position, operationally or financially. I think now is absolutely the sort of time to buy our shares.
Fantastic. Mark Burgess, thank you so much for the update.
Thank you.